What's up guys, Kevin Cage here with another crypto update. Markets have been absolutely insane. We have a bunch of information, so let's dive in. Alright, so where do we begin? First up, the stock market crash, which also had additional catalyst with that. So we had the Dow Jones closing more than 300 points lower. And that posts the worst week since June of last year as the Silicon Valley Bank collapse even sparks additional sell-offs. We also had the SEC threatening to sue a variety of crypto exchanges, saying that they are not regulated custodians, also coming after a variety of other exchanges for offering crypto staking products. So coming after Coinbase, Kraken, you name it. And I also got an email from Coinbase today, really just emphasizing that yes, they still have staked assets, but really putting out a disclosure and saying that you are earning from the protocol validating a specific blockchain or network, and it is not Coinbase paying you for that. Coinbase just takes a certain fee. We also had JP Morgan saying they are bearish on crypto, shocker of course, right after Bitcoin wicks just below 20K. We had the SEC coming out again and now saying Ethereum is a security. Now of course maybe early onset practices with the Ethereum Foundation were a bit shady, but I do not believe that Ethereum today is a security. Funny enough that JP Morgan owns a huge amount of infrastructure within Consensus, which basically oversees the Ethereum network. And I know us XRP holders are used to it at this point, but I'm still wishing Ethereum very well. There are hundreds of thousands of projects and ERC20 tokens on top of Ethereum. I'm wishing for Ethereum to do very well. I do not want the SEC going after them. Because if they go after ETH, this is going to create a major butterfly effect, and a variety of other projects will then be in danger. Remember that out of the entire crypto market, the current total market cap is just under $1 trillion at $929 billion. Bitcoin still accounts for 41% of that entire market cap, and Ethereum almost 20% at 18.5%, a huge chunk of money in volume. So if Bitcoin or ETH suffer, many other altcoins will follow. And of course our thesis long-term with utility, actual adoption, and regulatory clarity would lead other altcoins to potentially decouple from these two. But not yet. We also had Silvergate Capital Bank collapsing, plus additional concerns of Circle, the firm that oversees USDC, the stablecoin, having exposure, along with the Silicon Valley Bank, which is a major bank in the tech startup ecosystem. So we'll touch on this briefly because this is major and could have an impact in the crypto market. And touching on Silvergate Capital, which is a mainstream bank that connects to the traditional financial system, and it has been hit absolutely hard. Now, it is not a crypto bank per se, it just made a lot of large crypto bets. And since some recent losses, they're in trouble. Therefore, it's also affecting the traditional financial market. We also had Hedera for some HBAR news surpass 5 billion transactions on mainnet, but we've also had some terrible news related to some attackers or hackers that exploited the smart contract service code of the Hedera mainnet. So by exploiting this code, they were able to transfer Hedera token service tokens held by victims' accounts to their own accounts. So we'll touch on that as well, along with additional concerns related to a variety of stablecoins. USDT, USDC, and then BUSD of Binance. Okay, so we have more than $70 billion wiped off the crypto market in 24 hours as Bitcoin drops 8% below 20K. And here's a poll I just posted. Does Bitcoin's price break the low of 15,500 that we set back in 2022? And it keeps updating because this poll is not finished yet, but we have about 46% saying yes, it does break, and we have about 53% saying no, it holds. Now looking at the Bitcoin price chart of today right here on the left hand side, and then this is Bitcoin during the 2015 bear market. We can see that we wicked all the way down to $150, serving as the spring in our Wyckoff accumulation schematic. We came back up, another bull trap, one more drop, but this wasn't quite a double bottom. We did not revisit the previous low, so we did have a higher low actually set before the trend began to climb higher. Now looking at some fib retracements, comparing it to the 2015 bottoming structure in the bear market, we can use this wick and take a peek. And we can see that Bitcoin in this scenario using that wick as the swing low actually reached the 618 to perfection. Now on the macro, I personally do believe that Bitcoin is here, and not financial advice, but I do believe we have bottomed back here. And this was back in November of 2022. But keep in mind, nothing is guaranteed, anything is possible in the crypto market. Last year in 2022, one of the roughest years in the crypto market, no doubt about it. We had so many black swans, I can't even keep track, between hedge funds, FTX and exchanges, other liquidity providers, a variety of hacks, you name it. But looking at structures, I think it is clear that we're in some type of formation before a retracement. The question is, do we hold this level? Do we tap at 18.6? Do we do a double bottom? Or do we create another low before getting this show on the road? In just my opinion, I think we're going to be holding this level, and I do not believe we create another low. Now remember, in the 2015 bear market, we actually went all the way up to the 618 Fibonacci retracement. We rejected it for a period, came back below the 382, got the show on the road. And we can see down here, we are ranging for a couple hundred days right there, just playing a game of ping pong between these two fib retracements before the breakout. And taking a look today, we can see the wicks are also respecting to some degree this Fibonacci retracement, also treating it as resistance before breaking through that level again. We can see support at this level and now breaking through that support. So if I had to take a macro guess looking at previous cycles, and we'll also look at the 2018-2019 bear market, I would assume we are still down here. But I also think we are another day closer to breaking out of this. We just have to wait out all of this bad news, let this play out, let us find a bottom, and get the show on the road. So since the 2015 bear market, Bitcoin retraced in 2016 up to the 618. Now let's take a look at the previous cycle during the 2018-2019 bottom right there. Notice as we are finding the 2019 Bitcoin bottom, and this structure right here does remind me a lot of the Casper price chart CSPR. We can see that the Bitcoin price chart from these lows retraced all the way up to the 618 Fibonacci retracement, just like the previous cycle in 2015 to 2016. Now in 2015, we pulled back a bit under the 382 and kept going. Here we had March 2020, and in 2020 we crashed all the way back to previous fib retracements and previous lows, and then V-shaped recovery. So I personally believe that the Bitcoin price chart is playing around with a structure very similar to the 2015 bottom along with the 2019 bottom before we got that pop towards the 236. But we have yet to even retrace up to the 236 where there is plenty of resistance right there. Previous support levels there, and there. Going back to the previous cycle as well, did we go up to the 236? Yes, we did. We can see wick, crash, and then finally came up to it per candle bodies and then treating it as support multiple times before lifting off. So now the 236 for Bitcoin, and also this triple bottom is interesting. It's not perfect, but we can see additional levels of resistance. The 236 is 28K. So me personally, I do not want to range here any longer. I don't want to bounce between 15.5 up to 21K. I want to get a breakout. But I know the current macroeconomics are looking pretty dangerous. I hope it is made by design to scare retail out, and we'll talk more about that. And overall, on the macro, I believe that Bitcoin retraces. We can see 28K at the 236, and we can see the 382 at about 35,800. And remember, previously we reached the 618 here, and then also the 618 there. And that would be equivalent to about a $48,000 Bitcoin. You can see the 618 right there. And remember that the Bitcoin price chart for the CME futures just had an open gap here that was officially closed now at that 20,000 level. So remember, we have gaps above and below. We have a $9,800 Bitcoin gap right there. We have gaps above still at about 28,000 and also around 35,000 that are open right there, you can see. So now that we are well over a year into this bear market, looking at a variety of bottoming structures, I personally believe that we do close these upper gaps. And notice 28K is also an additional confluence with the 236 that we've been pointing out right there, 28K. Also be sure to go to casperwallet.io so you can sign up for beta. I believe they're opening up wallets for next week. And taking a look at casperstats.io/stats, we can see the holders have gone up from 102,000 up to over 106,000 Casper holders. And we can also see the 24-hour transactions is actually up by 25% over the past 24 hours. So across the board, we're seeing a bunch of things trending. We can see Tether, we can see Silicon Valley Bank, and we can see USDC. And I cannot wait for the day to see hashtag Gary Gensler resign trending. So Anders pointing out things will get ugly. We can see we have just witnessed the second largest bank failure in the United States history. Silicon Valley Bank's collapse marks the largest bank failure since 2008. When a bank collapses that quickly, something is wrong. And back to the Silicon Valley Bank, they said they sold off $21 billion worth of their holdings at a $1.8 billion loss, almost a $2 billion loss. Also on Reuters, we have JP Morgan ending their banking relationship with the crypto exchange Gemini and the Winklevoss twins. The decision comes days after Silvergate Capital, one of the most influential lenders in the digital asset industry, warned of doubts over its ability to continue as a going concern, fueling a rout in the crypto markets. But it's weird because this article says JP Morgan ending their banking relationship with Gemini, the crypto exchange. But in a tweet, we had Gemini, the exchange, saying its relationship with the bank remains intact. And JP Morgan declined to comment. Okay, and let's finish up with Hedera before this video gets way too long, guys. Big thank you to all that hit the like button. So we have Hedera, over 5 billion mainnet transactions. But 2 days later, this bad news came out. We can see today attackers exploited the smart contract service code of the Hedera mainnet to transfer Hedera token service tokens that are held by victims' accounts to their own accounts. So the attacker targeted accounts used as liquidity pools on multiple dexes that use Uniswap version 2 derived contract code ported over to use the Hedera token service. including these 3 dexes: Pangolin, Saucer Swap, and I believe it's pronounced Heliswap, but correct me if I'm wrong. When the attackers moved tokens obtained through these attacks over the Hashport network bridge, the bridge operators detected the activity and took swift action to disable it. So the Hedera community, all of these groups and teams worked together to investigate this attack. To prevent the attacker from being able to steal more tokens, Hedera actually turned off their mainnet proxies. Now the mainnet is still operating, so we're going to go over this. But by turning off mainnet proxies, this removed user access to the mainnet. The team has identified the root cause of the issue and are working on a solution. Now I like HBAR, I believe it in the future, but this definitely looks like a centralized look for the network. We have to understand this is an enterprise DAO, so it is not just meant to be a perfect Bitcoin public network by any means. This is for enterprise adoption. So I understand this is necessary, and I'm kind of glad they actually have this because hopefully they're going to be able to protect a lot of people and users' funds. But if you're one of those investors that only cares about decentralization, then maybe stick with Bitcoin, but every single project has their faults. I'm much more interested in enterprise adoption at scale because I'm excited for what utility and tons of transactions can do for the token price in the future. So once the solution is ready, the Hedera Governing Council members will sign transactions to approve the deployment of the updated code on mainnet to remove this vulnerability, at which point the mainnet proxies will be turned back on, allowing normal activity to resume. So the mainnet is operating, but they turn off the proxies, but when the proxies are off, this actually removes our user access to the mainnet. And I'm glad that Hedera put all these tweets together and spelled it out very clearly, but man, it is just not a good look. And I'm not affiliated with Hedera, I've just been a long-term holder of HBAR since it initially came out, just finding out about it online. Hedera is turning off network proxies on the mainnet, making it inaccessible. Hedera Core is working through the smart contract irregularities and will re-enable proxies once resolved. So we can visit status.hedera.com for the latest updates, but it looks like they're still investigating the issue as I'm recording this. So the Hedera mainnet or main network is online and reaching consensus. The network integrity remains intact. IP proxies were disabled, making the network inaccessible. So back in May 2020, proxies were introduced to ensure the security of the Hedera network. So we can learn more about that right on hedera.com. Now the good thing is, as of right now, the attacker is unable to transfer stolen funds, and funds in any retail user account should be considered safe. And for anybody curious, if some of your HBAR wallets are showing a zero balance, be sure to listen up. For comfort around the security of account funds, please use hashscan.io to look up your account ID or your wallet address. And the information displayed on HashScan, the block explorer, is the latest state from a mere node. Some wallet providers query the mainnet for account balances rather than a mere node, and in that case would display a zero balance, because the mainnet is temporarily inaccessible. So I have some HBAR and Hashpack and it shows my full balance, no problem whatsoever, but I also have a buddy using the Descent wallet and he says his balance shows zero. So I'll assume as soon as the proxies are turned back on, that should be fixed, and then you should see your balance again. But in the meantime, you can go to hashscan.io, you can paste in your HBAR address, and then you should be able to see your actual HBAR balance. But holy cow, what a crazy day, and I'll keep it PG. I'll be sure to dive into a bunch of other things related to XRP in the next one. Just wanted to really catch up because I was traveling this week, going to see some cool waterfalls and hike around, and still doing 75 hard, and I am on day 38. So I'll keep you guys updated. Hope you enjoyed, and I will catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.